We did finish up at 0.38% today, and the Nasdaq did finish at 1.12% up. The Dow was up 9.63 points, just 9, and essentially that's 0.02%. So that's dead flat. When I see a candle like this, to me, we just kind of have a doji. I do a lot of candlestick chart patterns. I really do believe in those. They do work. A lot of people say they don't. Here, we obviously did have our morning chart here. I did call it out here on the Discord. We also did really well here in the Discord this morning. Take a look at our 718 calls here at 8:35 in the morning. And within essentially 5 or 6 minutes, we did use the same exact pattern right here as we see right here on SPX here, but obviously we did that on the NASDAQ. And we did use those chart patterns here, and we did really well this morning. We took 718 calls, locked in about $1,500 worth of profits, and then we got involved with some other calls later in the day. We were down a little bit here, 721 calls, 723 calls, and 721 calls here. And then, by the end of the day, we closed and locked them in for a really great gain of $1,505 or 20%. Using chart patterns and different things that happen in the market. If you're interested in joining the community, there is a wait list to get in. So if you guys are on that wait list, keep an eye out for your emails. I do send out, we'll be sending out some new invitations here in the next week or so. So just make sure that when you do get those emails, you do have about 48 hours to respond. And I think that's important, obviously where we finished and why it tells you nothing is it's a range shade, it's quiet, nothing happened, wrong, the index flatlined because money was rotating, not leaving. When I say money is rotating and not leaving, DRAM was up 10%, cybersecurity at 5%, Korea up 5.4%. Remember that drop that we talked about over here where about 400,000 Korean accounts got liquidated and the markets tanked. While that same market obviously that did that was right here, up 5.4%. Goldman Sachs at an all-time high on the same tape as IBM's worst day ever. Rotation is kind of where the footprints are. Flat index plus violent sectors equal the real story. That's really underneath the hood of all things. Update my Discord here. Banks had one of the biggest profits in American history, but obviously we sold under that in the 90 minutes from open. And the JPM CEO warned literally to her face that the top is in. He does have a history of doing this, so it's really nothing to kind of, I think, take to heart. Typically, they sell off here that, I listed here on the Substack report. Again, make sure you're subscribing to the Substack. But, today, obviously, they fared well. Anyways, going back here, we had rotation. Obviously, DRAM was up. It says here 12.5%, but let's just say 10%. And obviously, we had rotation here. Cybersecurity up a whopping 5%. So, kind of the key things that I'm looking for into tomorrow. I think it's very important for traders to do this. Mark your opening levels here. Mark your pre-market high, your pre-market low. And what I mean by that is what is the market's doing in kind of the after hours here. So if I go over here to M&Q, I'll just clean all these lines off here. So if I go here into M&Q and I just hide these indicators, we don't need them here. I want to know where the previous opening day was. So we closed on Friday right here. Let's mark that here. And where did we open up on Monday? We're just going to mark that here. Where did we close that on Monday? Here, and then we opened up here on Tuesday, and then we closed on Tuesday, roughly here. So I think these are really important levels here to have mapped out. For me, I think it's important to understand this upper level here, and we're not even getting that technical, we're just looking at levels here. you'll notice that these levels look pretty clean, honestly. And I think a lot of traders, they're trying to understand, like, where should it go long or short, where should it go long or short. I think there's certain zones where you really don't want to get involved because the move already happened. But I'm a big proponent on when you just kind of mark your levels. We didn't even use Fibonacci's on this chart. We just marked the kind of the opening range and the closing range for the past few sessions here. And we got a lot of nice levels here. So when we kind of look at this chart here for levels for tomorrow, we can see here levels maybe we can get involved in here. What happens when you get involved at these levels here? Look, you literally go down or up. Now, I'm going to have somebody say, well, oh, dude, anybody could do that. Well, I'm like, well, why don't you? Right? And the reason why these levels are important is look at this. Look how many times you actually have, right here, you actually have movement. And a lot of traders, right, they're trading days like where we kind of mentioned today, right? Where we mentioned today, when you have a range, when you're chopping, right? So chopping looks like kind of this. So obviously, you're here Tuesday at 8 o'clock here. I don't know where the opening was. Again, let me just fuck. So right, you have Tuesday here, and you go down, you go back up, and then you kind of close right here. That's chop, okay? That's really chop. Obviously, you can have some bars up here, but that's chop, right? So the way to avoid chop, right? The way to avoid kind of like, it's right here, because right here you're kind of like, you're not guessing, but price is kind of deciding what it's going to do. The way I view the levels is like you're cherry picking. So you're literally to the spot where it's actually 50-50. Why that's important is, again, this is where someone might lose me, so stay with me, is I want to have a 50-50 zone here, right? Because if me and you, we own a company here, right? Above this zone here, you can view it as bullish if you're using fibs, but just out the zone here. Above this zone here, bullish. Below this zone here, bearish, right? So if you're starting to tank here, you can actually adjust your position, right? Because at these levels here, you're getting big movements. Look at this. You're getting movements down or up. It's still chop, right? But right here, if I enter a zone right here, and then you just kind of use your date range or your price range here. So let's say from here to here is about 0.5%, and you get involved here. You're already halfway deep into the move here, right? So that's a war zone. So the way I kind of view levels and the way I view kind of getting involved in charts is like if you're involved in a position, right? If the position's down here and you know the next zone is up here and you're right here, well, basically, right, like 60% of the move happened. So now you're basically your risk to reward starts to look like this, and this is where people get into trouble. So right here, your risk to reward starts to look like this, right? So right here, your risk to reward was minimal, right? Like kind of right down here, and it kind of looking like this. When you get involved up here in a war zone, right? This starts to shrink and this starts to increase. That's where I view a war zone, right? If I enter like a 50-50 up here, right? The candles up here don't matter, but what can I do in real time though, right? I know that I'm most likely not going to chop, right? And again, different stocks have different movements, right? NQ that's moving 1,000 points a day basically, right, is completely different than, maybe like a Home Depot, right? So you go to Home Depot and like how big does it move? 331 to 338, not really big moves. Nothing that's really going to make me money. There's not a lot of liquidity and options like that, right? So, that's another part of it, just making sure that you're picking the right stock. But, if I'm looking out for kind of levels tomorrow, I mean, going back up here, baby, for that complete gap fill, right? And then what are you going to do from there? So if you're ever going to run strangles, obviously not financial advice, right? But if you're ever going to run strangles or kind of different option strategies, right? Imagine again, right? You're going short here, but then you're ripping up here, right? Well, you're cooked. Imagine if you go short here, right? On a pivot line right here, and you're going up, right? Well, it's a pivot though, right? You actually know it's a pivot. So you can strangle right here, right? And then kind of cut, winners or losers depending on like kind of how violent the, movement is and the amount of contracts you're out. There's just a whole bunch of stuff that goes into that, right? But also you're able to read structure here in real time. So you see like an inverse head and shoulders, but maybe see kind of breaking down here. You're short and you're long. You cut a little bit of your shorts here because it looks like the inverse head and shoulders is holding up here. You break out, you finally cut your last short here, right? You can adjust. And even if you were short, you could just flip long like, hey, it didn't break this level here. You're holding above this level, etc. But when you're entering into a war zone here, where there's really not a lot to go off of, or like it's just not a really liquid zone, like you're not going down or up here, you just literally went, etc., makes it very hard to, I think, trade. And I think that's where a lot of traders struggle finding their entries. I'm a little bit high, so I mean, hopefully I'm making sense and explaining it. But basically what I'm trying to say is there's really good levels to get involved with on stocks. You have to wait for those levels. If you're a trader, right, looking for plays for tomorrow, right, I can definitely give you levels already have, right? You already have your levels kind of marked over here. You can screenshot them. They're also posted on my Discord, so just make sure you hop into my Discord here. But I don't need to look at MACD. I don't need to look at all these other indicators. I just need to look at my levels right here. And again, that's, I think, a big thing that people forget. Like, I just need to look at my levels here. I can look at all the structure and all the other things. I can look at news. I can look at this and that. I just need to know, where is this candle in between here, these levels here? And do I give myself a chance in a market that's already set up against me? Okay. Anyways, gonna transition here to an AI stuff. It just makes kind of the content stuff sound better. I'm not really a big person on kind of going over market news, so I'm more of a person. I'm just very technical. It's a lot easier for me to kind of not go off of a monologue script in front of me. I like talking here in real time about charts and things that, basically don't have to kind of take my ass off of. If you enjoy the content, make sure to like, subscribe, share, all that good stuff. Peace.
Welcome to this video on Operation Night Market, a debrief of the market session for July 14, 2026. Today's session covered significant global developments, from Korea to ASML and CPI data. This slide provides a high-level summary of what happened today. We saw significant volatility, including a notable drop in June CPI, historical losses for IBM, and record highs for Goldman Sachs. The closing bell scoreboard highlights index performance. While the S&P 500 reacted to the CPI print, the Nasdaq was driven by semiconductor rebounds, and the Dow remained flat, balanced by opposing company performance. Regarding macro data, this slide details the CPI report. It shows the largest single-month decline since April 2020. The cool core inflation number at 2.6% year-over-year is a key focus for the Federal Reserve. This slide covers the shift in Fed policy expectations. Following the CPI print, market odds for a July hike collapsed, while a September move remains in play, reflecting a, quote, prolonged pause regime. Here we analyze the session structure. After an initial volatile burst defined by the CPI print, the S&P 500 traded within that range for the remainder of the session, highlighting a day of internal rotation. We now move to the Korea file, which discusses the significant impact of the SK Hynix ADR, levered ETF activity, and the recent margin call events affecting 400,000 accounts. SK Hynix remains a focal point. Today saw the introduction of options on levered ETFs, and we track institutional behavior against the IPO VWAP and the market on close bid. This slide explains why the IPO VWAP is a valuable tool for identifying where real capital defends its cost basis, as observed during today's SKHY session. We are also seeing an expanding ecosystem of levered ETFs around SKHY. These products create mechanical rebalancing pressures that influence market behavior toward the close. Tape reading at the end of the day is critical. By monitoring the volume on the 3:50 p.m. bar, we can identify whether institutions were buying or selling into the close. The margin call scenario in Korea resulted in significant forced selling, but as this supply cleared, we observed a bounce, suggesting a liquidity transfer where smart money was on the other side. Failed patterns, such as a breakdown that does not follow through, can create powerful countermoves. This slide explains how trapped shorts can fuel a price reversal. For identifying potential bottoms, we use a 4-hour MACD histogram signature, a transition from bright red momentum to a salmon fade, followed by a green bar. In this final comparison, we look at the historical analog of past market flushes, noting that modern leverage has significantly compressed the time required to reach a structural low. Looking at the market tonight at 8 p.m., we face a binary choice, either a continuation of panic or a reversal. We are watching Korea's lead to see if they sell into our open or start buying back, which would signal a shift in momentum. Moving on to the semiconductor complex, the sector is seeing notable developments. DRAM stocks are up double digits, a key testing company reported significant news, and two major earnings prints remain to define the week. Memory stocks have staged a strong recovery. After a brutal Monday, DRAM as a group ripped nearly 10%. The thesis is clear. If ASML provides strong bookings tonight, those who thought the rally was over will likely need to buy back and higher. The SOXX index is currently wedged, having tested the same overhead resistance level 3 times. With the 55 EMA acting as a critical battleground, all eyes are on the upcoming earnings catalysts from ASML and TSM to see if this ceiling holds. AEHR provided a surprising tell, reporting a profit when the street expected a loss. By significantly raising its fiscal year revenue guidance, the stock rallied 25%. This signals that real silicon volume is still incoming, contradicting those who claim the semiconductor cycle had ended. ASML reports at 1 a.m. Eastern Time. The most critical component is their bookings. Weak numbers could drag down the entire memory sector, while strong ones would likely make the sector untouchable. We are planning our open tomorrow around these results. Taiwan Semiconductor reports tomorrow night, completing an important sequence of catalysts. While ASML indicates future equipment orders, TSM will reveal current wafer demand. If both report strong figures, the SOXX index may finally resolve upward. Financials are officially kicking off earnings season. Goldman Sachs has hit record highs, while other major banks are demonstrating varied reactions, establishing the initial tone for the market's response to financial sector reports. Goldman Sachs delivered a record second quarter, resulting in a breakout to new all-time highs on heavy volume. This performance provided crucial support for the Dow and sets a high bar for other financial institutions reporting this season. JP Morgan posted a solid quarter, though the stock initially gapped down following CEO Jamie Dimon's cautionary remarks. However, it quickly rallied from the lows, demonstrating that the market is focusing on the actual earnings power rather than macro sermons. The rest of the banking sector showed mixed results. Citigroup fell despite a solid quarter due to expense concerns, Wells Fargo faded, while Bank of America showed relative strength, emerging as a leader in the group. The current bull case is built on a stack of sectors, including financial leadership and semiconductor stability. Broadening participation is a positive sign, as the market is no longer reliant on a single engine to drive the rally. In the software space, we are seeing a significant shift. IBM experienced its worst day in company history due to a profit warning, highlighting a broader trend where enterprise budgets are being reallocated from legacy software toward AI infrastructure. IBM's sharp decline is a clear reflection of this changing capital regime. The contrast between this legacy giant's historic struggle and the explosive growth guided by specialized hardware companies defines the current market environment. Finally, the IGV software index showed resilience, undercutting, and then reclaiming its 55-day moving average. Despite weakness in individual names like Oracle, the index strength suggests the broader software complex, particularly cybersecurity, remains robust. Cybersecurity stocks are showing strength, up 5% on the session. Government signaling and increased security spending from clients, as noted by IBM's leadership, support this trend. We see wide-body closes forming solid support shelves, while Fortinet remains an interesting wildcard in the group. CrowdStrike showed a unique volume pattern today. After quiet trading all day, a massive block of about 1 million shares hit the tape in the final 5 minutes. Institutions are using this concealment tactic across the board, which is why monitoring the closing auction is essential. Next, we move to energy and market wildcards. Refiners are breaking out, regional geopolitical tensions keep risks elevated, and correlation metrics suggest we remain in a regime where individual stock performance drives the index. The refining subsector is showing clear strength, reclaiming key levels like the 55-day average. While Marathon Petroleum stands out as a leader, it's crucial to remember that these stocks carry significant tweet risk. One headline can cause them to break sharply. Size your positions accordingly. Geopolitics around the Strait of Hormuz is the primary driver for crude prices. Monday's surge in Brent was significant, but the subsequent pullback shows the market is sensitive to the latest headlines. This volatility creates a unique tension for the Fed, balancing cooling core inflation against combustible energy prices. The CBOE correlation index is at record lows, which implies that stocks are moving independently. This makes it a stock picker's market, rather than an index trader's. We should watch how the mechanical skewing from levered ETFs might be impacting these signals. Modern markets operate around the clock. From the Korea Open at 8 p.m. Eastern to the earnings prints from ASML and the final closing auction, we track key timestamps throughout the session. Staying alert to these windows is part of the process. Now, we define the battle plan. We will look at what we're watching overnight, monitor the market at the open, and stick to the specific rules that keep our risk management on the right side of the trade. Tonight's focus is on Korea's market reaction to the overnight developments, followed by ASML's critical earnings report at 1 a.m. We'll also keep a close watch on crude headlines from Hormuz, which have the potential to shift sentiment instantly. For tomorrow's open, watch how semiconductors react to ASML's bookings. We'll also be tracking bank performance and how cybersecurity names hold their recent gains. Remember, we adapt based on the market's action, not our own opinions. Our doctrine is built on core principles, anchoring to pain for cost basis, respecting the volume in the 350 p.m. bar, and understanding that failed patterns often lead to the most aggressive reversals. We prioritize subsectors to avoid trading the average. We monitor specific triggers that would invalidate our bull case, such as a major miss in semiconductor bookings or a sustained break of the 55-day moving average. Conversely, strong earnings and market breadth support our constructive stance. We trade based on 3 pillars: macro climate, fundamental engines like earnings guides, and technical indicators like VWAPs and volume. This comprehensive process allows us to define risk precisely before the market moves. You can join our community for real-time intel. We post our callouts publicly and timestamp them before the market responds. Check the description for links to our Discord, Substack, and social media channels. That concludes our briefing for this session. We'll see you at 8 p.m., then again at 1 a.m., and through the rest of the market day. The market never stops, and neither do we.